Hi everyone, Marv Eisen from Timeless Dollar, and today is Tuesday, February 9th, and we're looking at the one-day chart of the S&P Micro E-mini. On this one-day chart, notice that today, February 9th, the chart is showing us a bearish harami setting up. Anyway, let's get right into it. I've got this blue line set up that runs from 9:30 on February 9th to the market close at 4 p.m. And so you can see the price action through the trading day. Now, we want to find the place where is the best opportunity to make a trade. And look right over here, this candle right over here at 9:40, big hammer is an indication that we might be safe making a trade to the upside. And if we did that, prices went up until this almost a shooting star at 9:05. And right now, at this point, if you made this trade, you could have picked up, let's see, 2, 4, possibly 6 points right over here. And you should have hopped off at this shooting star. If you didn't, you would have given back at least half your gains, and you would have been probably shaken off. But this candle here, this shooting star, would have been the point to hop off. The hammer would have told you where to get on, and this would be a high probability trade. Now, where else was a high probability trade? At 11:15, prices bottomed out at 38.98, which was right at the point of pre-market trading, where pre-market trading found support. So 38.98 would have been a probable good point for a trade, another trade to the upside. And if you did that, you might have been shaken off at the 3,900 price level. But if not, this might have shaken you off, although it ended up higher. It closed higher than the previous candle. And if you stayed on here, it would have been another 6-8 points. So that would have been another area of high probability trading. Where else could we find a high probability trade? Well, right over here would indicate a possible high, but there's no way to really know it except by going by the stochastics. Stochastics is 20%, price action is 80%, and the price action here really didn't indicate a downside here that you would know that this was a point of resistance. Again here, when prices bottomed out and stochastics was at an oversold level, really difficult to know this was a price to trade, although a base seems to have been established at 150, just about 2 p.m., where you could have gotten on for another trade. But again, if you are like most traders, you don't trade during the middle of the day. So that would have been an indication that you probably would have missed. So the high probability trades were at 9:40 in the morning with this hammer, hop off at the shooting star at 9:55, and again at 11:15, 11:20, and you could have picked up another 8 points. So 6 points in the morning, 8 points in the afternoon. That's what I see as far as high probability trades. If you saw it, you could have made 14 points, which would have been 5 points, $5 a point on the Micro E-mini, $50 a point on the E-mini. So you would have had a good day. But again, it all comes down to recognizing the places of high probability trades. This is Marv Eisen for Timeless Dollar, and that's my call on February 9th, 2021. And I'll see you on my next video. Thanks for watching.